From Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Good afternoon and welcome to the COB, all the stuff you need to know in the day in business and markets. My name's Carl. I'm with Danny Akuye. Danny, our first, I suppose, episode of the COB together this week. So far, it's been a little bit sluggish, it has to be said, after, obviously what was a very positive week last week.
Indeed. So we had quite a bit of profit taking after those RBA minutes, which I'm sure we'll be discussing. Discussing, not disgusting.
Some might find it disgusting.
And so the market sold off by about, 0.4%. But look at that. We have had a little bit of a rally in the afternoon session. So SIBO 2.77 points down, or 0.2%, and ASX 200 not too dissimilar, down to around 18.5 points, or 0.25%.
Yeah, and let's look at a couple of areas of the market that were, moving today. The banks actually did okay. In fact, if there was one bright spot, it was the banks, and perhaps even the big four in particular. NAB what was the top five performers of the day, up by 2.2%?
It's also been one of the biggest underperformer.
Yeah,
so
okay.
It's probably some bottom fishing going on in that one, I suspect, or just catch up. Do you know what I mean?
Yeah, indeed. Okay.
Yeah.
Well, that's the banks there. Let's have a look at IT as well. Also,
in
some
the
strength
green.
coming through. I think WiseTech. We follow this closely, don't we? But I know you've got your handy CommSec platform in front of you, so I probably should, be paid if I am saying that. But you've got your platform in front of you. Is that a record high for WiseTech? Because I think that's the previous high was about 80.65.
Right.
I think we might have just
it actually was
hit
high.
a record high.
Yeah, it's looking a little bit that way. 80.68. I have the last one. So
we'll call it.
Yeah,
record
and it's
high.
actually, I think it actually traded as high as 81.38 today. So yeah, 52-week high.
52-week.
Well,
high.
actually more, all-time.
All-time high? Yeah,
All-time,
there you go.
yeah.
So WiseTech, we can pop the champagne for that one perhaps. There was a few other tech names as well that performed reasonably well today. But the cyclicals not doing so well. It seems to be that overhang of the China story there, to say the least. BHP, Rio Tinto down by, both around 0.75%. Fortescue Metals an outlier there, bouncing 1.3%. But generally speaking, we did see a lot of weakness coming through those metals and mining stocks. The energy sector as well, also not holding up particularly well. Woodside Energy down by 1%, Saul Pattinson down 1%. And there's been a few updates from some of those companies, but again, it seems to be this story about China's weak economic activity that might be weighing on some of these more cyclical areas of the market.
Yeah, absolutely. Literally, I think, so many traders are looking for the Politburo at the end of this month to come out with a big stimulation package, which will be really interesting, because I saw today Evergrande is still restructuring themselves with all their debt, and as many experts I speak to on China, there is a hesitancy to go in by the authorities in China and pump up that property sector again. So it'll be very interesting to see what happens.
Yeah, a bit of a crisis of confidence over there, and unable to sort of set off one of those virtuous cycles as the recovery sputters along. But it takes us reasonably well through our three themes. China is in there, having a few issues with that graphic, but it was effectively today China, the RBA minutes, which I thought the price action around that was very curious, just really because
it's a bit of nothing, really.
Well, it came off slightly, which one would have expected if it was sort of a hawkish statement, but we also saw the Aussie come off very briefly too before bouncing back, so there was some dislocation there. It is flat now, but again, some sort of atypical price action there, and I do wonder how much of the RBA, not just talking down the prospects of our economy, but also sort of warning about some of the headwinds that China could pose, may have, set a few of those algos off or something like that, because it was a relationship between the Aussie and the ASX 200 that you wouldn't typically see if it was just a monetary policy story. But last but not least, the other thing was confession season. We're getting them through, and of course, normally the confessions aren't, if they're making them now, it's normally not good news necessarily. We saw that with a few stocks.
Absolutely. So Ansell, they are still struggling with lots of inventory issues. Are we going to talk about, is that stock of the day, Ansell?
It will be stock of the day,
okay,
yes.
so I won't go into it, but it's down about...
We'll go into it now because we'll get our expert views in just a moment, but it is down, 13.5%, and that overhang from the pandemic still sort of persists in a way.
They're basically cutting the workforce, they're cutting production, they're trying to save cash, they're trying to really I suppose, right the ship, because the distributors are still sitting on too much inventory for that one. So just cast your mind back. Not only was it a pandemic beneficiary, but it has been one of the top healthcare stocks for many, many years. So it continuing to come under pressure, and that's a chunky fall from grace today, and it looks like it's well below its previous low that we saw a year ago, or sort of back in September last year. So not a pretty picture.
Yes, the big plastic glove glut, we'll call it. There's too many out there. I don't know what we do. Do we throw them in the ocean or something like that, like they do with milk and corn and all those sorts of things? No, Danny's staring at me. I obviously say that in jest, but of course that is something that some businesses do with certain things that wouldn't kill all the wildlife in the ocean if it were to happen. But let's move on just to some other news. Hub was also in the news. Funds under administration of just over $80 billion, but we saw on balance outflows from the platform.
It was actually down 1% today.
And it was down 1% today too. So almost tying in with that net wealth story that we covered last week around some of the difficulties confronted by some players in that space.
Indeed. Yeah, it's a very challenging space at the moment, particularly when markets aren't performing well for these platforms to still getting the inflows that they want.
Yeah, and we spoke about Woodside before. It was down 1% today. Obviously, part of that is the energy complex, but also the company flags high costs and a delay at first oil production, and it's a Sangomar oil project that's in Senegal. That was after a cost and schedule review. So a few issues there that clearly is hitting production for the business. The shares, like I said before, were down about 1% for the session, a little bit over that. But as you flagged before, Danny, the stock of the day, it was Ansell, and we had Rudy Philippek van Dijk from FN Arena, as well as Philip Pepe from Shaw & Partners, sharing their views with David Koch.
Actually think I would be more cautious. I wouldn't jump on board. If I own the stock, I probably would stay the course. I mean, you sell after it comes down. It's probably the same level as it was about a year ago, maybe a little bit further. But I wouldn't jump on it. I think there's still potential for. The problem with a company like Ansell is it's a manufacturer. The second thing is it does have lots of competitors in at times vital segments of its business. That's something it can't control. Inventories are a big problem. For me, the uncertainty is too high. I would, at best, a hold.
Near-term outlook until the destocking occurs, it's probably uncertain. Having said that, there's a lot of negativity in the share price. It's almost a 12-month low. It is a good long-term buy. To quote Warren Buffett, low price point, replenishable goods. It is classic. It's a company all people should look at some stage because the stuff wears out. You've got to buy new stuff every year, every month. Just right now, when a company puts out that sort of trading update, it's not going to outperform anytime soon. No. I wouldn't throw it out with the bathwater. I would call it a hold. But clearly, you'll see a whole bunch of analyst downgrades overnight. It'll struggle for the next foreseeable future. Okay.
Well, certainly not running out to buy it by the sounds of things.
No, very much hold. I mean, there's a lot of water under the bridge that has to happen with this stock, really, I suppose, for people to get excited about, because it is just being downgrade after downgrade.
Yeah, okay. Well, let's get perhaps a view of our guest for the next 10 minutes or so. Henry Jennings from Marcus Today. Henry, great to see you there. Obviously, Ansell was one of the big movers. I mean, do you have a view on the stock, on the company at the moment? Because clearly it's in, well, something of the wars.
It has been in the wards. Good afternoon, guys. Ansell very much was a winner, I guess, during COVID through various things, especially the gloves and other hospital supplies. And we now have the hangover. And we have a new CEO that's been there for a couple of years. And even he is talking about organizational change, calling out external earnings headwinds, FX, higher interest costs, higher tax costs, and also the great glove glut of 2023. And they certainly are carrying too much stock and they need to get rid of it. There is competition there. It's hard to see this one bouncing, if you pardon the pun, for a company that relies on rubber pricing in the short term. And I would imagine we're going to get some earnings downgrades. Hell hath no fury, like an analyst wronged. And we will see downgrades to come in this one. No reason at all to buy. It looks like this one, I wouldn't be surprised if we got the strategic review from Neil Salmon, and we saw the company thrown into a little bit of chaos as he tries to deal with some of these problems. So I'd certainly be avoiding it. It's never been on my radar, I must admit. It's not one of my favorites. Too many moving parts for this one, and obviously it has been a big winner from COVID. Who remembers COVID? That seems such a lifetime ago now. So let's move on, shall we?
Indeed, move on we shall. And I was just looking at Lendlease, Henry. They have, I know, sorry, a bit of a shock. It's just the share price came up in front of me and I forgot to remind ourselves that they have actually laid off, I think, another 10% of their workforce globally, about 740 people. And it just seems we have a bit of a confession season at the moment going on, and a bit of not only companies downgrading, but also companies looking, going, oh gosh, this isn't quite going according to plan. We might have to let some staff go. So are we seeing further signs? And I know you don't do macro, but you know,
I'll do anything. I'll do anything for you, Danielle. You know that.
Thank you. It seems like life is, you know, it's not getting any easier for companies at the moment. And Lendlease is just another case in point.
Well, it is a case in point, but let's face it, Lendlease has been on the nose for years now. It really has been a blue chip in decline into really irrelevance. I mean, I can't remember the last time we wrote about Lendlease in the news there. I can't remember the last time I even thought about Lendlease. It has been a company in decline. Obviously, you know, the RBA and other central banks want companies to shed workers. And in the US, we've seen it has been a recipe for stock market appreciation. A big clap from investors as we've seen tech companies and other companies around the world shed workers, sack people, lay them off, whatever you want to call it. And the market has rewarded them. Lendlease is just the long line of this. I guess less people doing more things, more work, probably for less money, I would imagine. But as I say, Lendlease has been a stock in decline for some time, and it really has been out of the sort of, it's gone from blue chip to, I don't know what the next color in the rainbow is, but it's certainly no longer a blue chip stock, that's for sure. You know, I think we're going to see more of this as we go forward. I mean, that's the whole point of interest rate rises and the macro management of the economy through that one heavy weapon, that one very, you know, it's a very blunt instrument, but this is obviously what central banks want. They don't want one or two people to be made redundant. They ultimately want, you know, big parts of the economy to restructure slightly and take some of the sting out of the inflation. And this is just part of that. But certainly, yes, there have been a few confessions around this today. Ansell, Lendlease, I'm not sure if that counts as a confession, but certainly as we head towards reporting season, I'm actually surprised that we haven't seen more. We do get a lot of production reports this week as well, but we haven't seen that many confessions. The market tends to be pretty well updated, and it's unusual to get massive surprises. Having said that, the reaction to even a small surprise is massive these days, and we've seen that with some stocks. You know, Ansell 15% down on that, and it's you know, we have seen stocks being rapidly re-rated in seconds on the back of even a minor adjustment to guidance. So volatility remains is the answer.
Yeah, absolutely. And one source of volatility, of course, from the macro, and I guess to an extent micro point of view as well, is just this issue around Chinese growth. The RBA pointed to it today in its minutes. The market seems to be responding to those weak GDP figures yesterday still. Obviously, you're someone who keeps a pretty close eye, well, especially small caps and some of the companies that are sensitive to Chinese growth. I mean, how are you viewing that at the moment? I suppose it's kind of just waiting for stronger signs that policymakers will support economic activity.
Is it? I don't know it is. Let's face it. You know, the US banks are downgrading their Chinese GDP to 5%. Most countries around the world would give their eye teeth for 5% growth, let alone the second biggest economy in the world having a 5% GDP growth when the rest of the world is slowing rapidly. That, to me, is a pretty big number. I know it's below forecast, but then sometimes I'm not sure what the forecasters are smoking, to be honest. But 5%, even though that's being downgraded, that is still a whacking great big number for the second biggest economy. You know, the US is growing at next to nothing. We're growing at next to nothing. The UK is going backwards and Europe's struggling. China, 5%. That seems to me, in the land of the one-eyed king, or in the land of the blind, rather, the one-eyed king is, the one-eyed man is king, and that does seem to be good. So I'm not expecting bazooka-like stimulus from the Chinese authorities this time around. They've done that. They've played that game. It hasn't necessarily worked. I think it's going to be more a sort of a slow and steady and a re-engagement, I guess, with the West to some extent, hopefully anyway. So I'm not expecting bazooka, but I am expecting, 5% still. It's not bad, is it? I mean, let's face it.
No, not bad, but it's always about expectations, isn't it, Henry? And
whose? It's only because we get analysts that pump up our expectations, and then we all get carried away with those expectations. And then when they come back to reality, and I think 5% was what the Chinese authorities were targeting anyway. It was only when let's face it, most of these upgrades and downgrades are used to create business and to create trading opportunities, the same as the RBA minutes today. I mean, the market dropped 20 points in the flash of an eye, and then it just spent the rest of the day regaining it. I mean, nothing really changed. The minutes were as expected.
Indeed, they were. Look, Henry, thank you so much. Always great to see you. Great to have your commentary and great to have
Pleasure.
your humour.
Thanks.
Henry Jennings there from Marcus today. Okay, let's get across some of the leaders and laggards now, shall we? Starting off with the leaders and NW Holdings. Now, I don't know if it had anything to do with this news, but entered into an agreement, and I can't remember who it was with off the top of my head. You might be able to clarify for me. It was yesterday afternoon, but it might only be coincidental, but it was higher by 4.9% today. Sorry, go on.
Yeah, it's entered into a contract with the Toowoomba Regional Council for works under the 2022 flood recovery project. And so works will be undertaken on more than 2,500 individual sites. And the contract is valued at around $113 million. And that could well be why the stock popped so nicely today.
It was the top performer for the market. Block also up, net wealth bouncing after pulling back over the last few days, certainly at the back end of last week. And as I flagged a little earlier, NAB, one of the lead banks there, up by 2.2%. Laggards now, there were a few of them. We've already spoken about Ansell. It's down 13.7%. Sura had another production update now and pointed to tough trading conditions to come. Ooh. So it just keeps getting worse for that stock, really. Almost starting to look like a capitulation there. But who's to say, down 16%. Horizon 2 also out with an update.
Which disappointed, obviously.
Was another disappointing one, yeah, exactly. So again, these are another victim of confession season. Lend-Lease, we've just spoken
cutting
about
staff.
Cutting staff with Henry was saying that Nickel Industries, that might just be one of those cyclical names that we spoke about underperforming. I don't know if there was any news necessarily out of Nickel Industries, but you can see there, some pain being worn from some company shares there.
Yeah, and also too, just it's sort of like, warning shots over the bow that this could be a pretty volatile earnings season. So the companies may come in with results in line with expectations, but should their outlook disappoint, it is a case where certain things on these low volumes that we're apparently having get taken out and, they're chunky moves. Companies like Ansell are 14% almost.
Yeah, for sure. Okay, let's look at some more chunky moves now because small caps, leaders and laggards.
High pages.
Do you know what that is?
No. Yeah, well, I know what it is, but I don't know the announcement, yes.
Well, no, I didn't even know what that company is. I would have called it Hippages.
So we move swiftly on.
Yeah, well, I don't know. I just high pages, and that's how you were saying. Yeah, so we speak about that all the time. That's on there. Okay, let's go to the laggards now. And Poseidon Nickel, there must be a nickel story there if we've seen nickel mines as well as Poseidon Nickel off. Not too sure necessarily what that is. But as you can see there, a few of the...
and coal of almost 7%, yeah.
Yeah, there you go. Okay, let's move on to what's happening overnight now because there's a little bit of news from both the macro and micro point of view. Canadian CPI will be interesting because we did have the Bank of Canada hiking interest rates last week, and actually a great time for a somewhat shameless plug because you did have a chat with a fairly high-profile Canadian economist today.
Yes, David Rosenberg, who is famous for having called the property bubble pre-GFC and calling that when he was at Merrill Lynch. Very highly rated consultant, economist and expert. And just a great chat with him today. He's looking for inflation to really fall off a cliff next year. He is seeing a US recession, but he also pointed out the Canadian central bank will raise another 2 times. And we were just drawing a bit of a comparison between Australia and Canada.
Yes, and well, if it's a race, we'd be certainly losing to the Canadians on that one. US retail sales also important just to get a gauge, obviously, on consumer activity in the States, which, well, I suppose remains relatively strong, certainly not at recessionary levels, and industrial production. So I plugged this one in yesterday, Danny. I think I might go back to this a few times this week, just because it's a good chart. Earnings in the week ahead, and we can have a look at what's coming up tonight. Bank of America, Charles Schwab and Morgan Stanley, probably the 3 there that might, I suppose, inform the most how trade unfolds in the early stages of US trade tonight, but you can also see at the back end of the week, it's pretty busy.
Yeah, and Wednesday is a big one because we have the mighty Tesla and Netflix coming out after the close on Wednesday, which is Thursday morning our time.
Always fun. And last but not least, look at what's coming up in the day ahead tomorrow, and just a few production reports there. Northern Star, one of them. Woodside, another. What's BPT? Is that Beach again? I can't remember.
BPT, yes, Beach.
Yeah,
Yep.
okay. And okay.
Northern Star, Woodside, and I'm not sure what MSV is.
Well, there you go. Nevertheless, confession season, production reports, we might see some further volatility in certain names as we get some of that dirty laundry aired before the reporting period. But Danny, big day, long day, busy
Long day, busy day, haven't finished yet, so we're going to say have a great evening, and we'll see you all tomorrow.